Hey everyone, it's Matt Levchenko here with the Hearn Group, and I wanted to give you a quick market of the minute update. And today's conversation is about rates and affordability. Now, what's happening right now is that we're getting into the holidays, and we're encountering a lot of sellers and buyers who are saying, we want to wait until after Thanksgiving or after Christmas or maybe even after New Year's to do something, just because all the different things that are going on and real estate slowed down and things like that. And what I wanted to say is that that's fine, but I want to make sure you understand what it's going to cost you to wait. And so for the past year, we've been talking about the rates are scheduled to change. The rates are poised to change. All the economic indicators are showing that rates are supposed to be going up. Now, for the last year, everybody's been scratching their head because the government's been artificially holding them back. And this isn't a political post. We're just talking about the numbers that are out there. So I wanted to show you what the difference is of buying a house in October or selling a house in October and then seeing what you can afford later, and what it is today. And so back on October 5th, I wanted to give a little shout out here to Ryan Plattner with Origin Bank, who sends us our rates on a pretty consistent basis. So reach out to Ryan, give him a call. They've got some really good programs there. But what we're seeing here is on October 5th, a 30-year fixed conventional loan was 3.5%, which is fantastic because the 30-year average of interest rates for home loans, the 30-year average is 8.9%. So at 3.5%, it's incredible. In fact, it's some of the lowest rates that we've ever seen. So not even a month later, well, just over a month later, and more importantly, right after all the elections have happened, look what happened to the rates. Everything went up almost 0.5%. So a 30-year fixed rate is now 4%. And you're probably thinking, well, that's just 0.5%, Matt. That's not that big a deal. Well, if you're maxed out on a certain monthly payment, let me show you what that looks like. So let's just say, for instance, and we're gonna do the most bread and butter average in Johnson County. And so I wanted to show you. Here's a listing that we have available, and if you wanted to take a look at it, Rose can show you. It's in Merriam. It's a 4-bedroom, 2 full, 2 half bath, just under 2,000 square feet, listed for $230,000. And so on our website here, we have a little calculator that can give you an estimate of what you can afford. So at $230,000, by just putting 5% down, because a conventional loan, there's 5% down conventional products. Ask Ryan, he can tell you more about it. With the taxes, insurance estimate on a 30-year loan at 3.5%, that payment is $1,275. So if that's what you can afford, $230,000 is the max that you can take a look at. This would be a perfect house for you to come and take a look at. So let's take a look at what happens when the rate goes up just 0.5%. So when we hit that, it changes the payment to $1,337. Now that's not a lot for some people, but for some people it's more than enough to take them out of that price point. So if, let's say, $1,275 is your max and you're like, Matt, I can't spend $1 over $1,275, which I respect and I totally get. So let's take a look at what we have to do to the home price. So in order for us to get at that $1,275, and I did this ahead of time, so don't think that I'm really that good at math, we have to look at now houses priced at $217 or less. So if I hit calculate at that 4%, so there we are at the $1,275. I even saved you a couple cents. It's $1,275 and 8 cents. So October 5th, you could afford a $230,000 house like this one. Today, we have to cut off the search at $217. That may get rid of one of these bedrooms. That may get rid of some of these half baths. That may reduce your square footage or limit you to certain areas of town. So let me show you what it looks like with numbers. So some people like pictures, some people like numbers. Let me show you the numbers. So if you can only afford $1,275 on October 5th, you could look at houses up to $230,000 when rates were 3.5%. Now that rates have jumped up just 0.5%, your affordability went down to $217, which is actually a 5.6% loss in what you can purchase. And so if you're thinking about selling now or in like right at the first of the year, it could cost you a lot more on the buy side to wait. I know that sometimes it can be a little inconvenient scheduling showings around holiday get-togethers and whatnot, but these are real numbers. The last 6 weeks have cost you $13,000 in affordability. Houses aren't going down in price or up in price to beat what happens with rates. Rates are the biggest unknown right now. And so all we know is that they've been low for forever, and the government's been holding them down low. And now that everybody got either reelected or removed or whatnot, the elections are gone, the markets are going to start doing what they need to do. And we're already seeing that they're starting to go up. So if you want a completely zero obligation, no pressure, no sales pitch, opinion about the value of your home and what we could get you today, call us right away. And if you're thinking about buying a home, you may not want to wait until after the holidays because you may be looking at a completely different class of home. So anyway, to get together and find out exactly what your options are and taking a look at real numbers, not emotions and not opinions, give us a call. Take care, guys.